Hey guys, Camilo here. I hope you are well. So, if you missed last night's live stream, the recording is up already on my YouTube channel. And so you guys know next Sunday I will be going live again at 8:30 Eastern Standard Time. So make sure you don't miss anything as we review the markets using Elliott Wave analysis. So consider subscribing to the channel, smash that like button, and hit that bell notification so you'll be notified when I go live, and also when I upload these videos daily. Okay, so today we saw a bit of a sell-off, and that's due to the infection rates, right? Thus putting concerns on the economic growth. All right, so the SPY fell just over 2% intraday or the cash session, while the Nasdaq and the Dow both shed heavy losses. So the way I'm viewing this, guys, you know, this can go anywhere at this point. All right, and so the way my interpretation, right, is telling me is that we may have a relief rally coming into tomorrow or Wednesday. Okay, now here's the catch. If that's the case, if we see a three wave to the upside and then we get rejection, okay, I want to see tomorrow's price, how we open. Okay, so to start determining fib levels, but I'll point some out real quick here, before I go any further. But what I was getting at is that if we print three waves such this, right, we go up three waves and we reject a zone here. Let's say, for instance, if we take a retracement tool and we reject the 50% or the 38.2, okay, this area here, and then we start selling off, then that's a big concern to me. Okay, but if we don't and we start heading higher in 5-wave impulsive structure, then this whole correction is over and the wave 4 has been set. Now, invalidation for the entire wave structure here comes in at the 344 spot 51. So just as no longer we remain north of this wave count, of this price structure, this wave count remains valid. All right, so here's what I'm looking at. Okay, so on the 30-minute time frame, post fourth wave, we went up in one, three wave pullback into the wave two, cleared 38.2% retracement support, 1, 2, 3, 4, 5 into the third wave. Now ABC pullback. All right, here's where a running flat can be tricky to trade and track, okay, and where it can trap the bulls and the bears. As I mentioned to you guys before in previous videos, the wave A sets in, right, makes a new low here. Wave B rallies and makes a new high, knocking out the previous all-time high, thus signaling to the bulls that we potentially will head on higher. Little do they know, and this is where a lot of traders fail to realize, is that we always, when we take retracement tools, and especially when we're trying to track a correction, especially on the fourth wave, we must always consider the external retracement, the 1272. Why? Because you can see here that it acts as clear resistance in a corrective running flat structure. Okay, so here we go again. So down in A, up in B, and then where we are going to potentially trap the bears is that in this area here, right? They may think that we're going to head on new lows because we broke the previous low. Just like in the bears, we broke the previous high, head on higher, previous low, head on lower. But if you're aware of the Elliott wave corrective structures, a running flat will do just that. It's designed to do just that, guys. Now, the 1618 was support. So the 1618 was an extension from the wave A to the wave B, and we found support here. Before yesterday, actually Friday and Thursday, we were looking for the 100%, but we gapped down and we consolidated here, holding support. Now you can see here that when we made a new low, we were holding this area of support, but the RSI was making a new high. So we have a positive bullish divergence. The MACD is also crossing the moving averages, and the histogram is ticking to the positive side. All right, now the way I'm looking at this coming into tomorrow, again, I will want to see the 1618 or the 352 hold. Alternatively, if we keep on continuing lower, then our next level of defense should be the 344 spot 51. All right, so I am patient on the Nasdaq. I am waiting to see what's going to happen tomorrow. Maybe we do hold support here and head on higher, but that'll be for tomorrow to confirm. All right, guys, so taking you over to the SPY. Over in the SPY, I have an alternate account that suggests that we have already topped. All right, and so before I dive into that chart, let me review this one with you because this is our preferred interpretation here. So from the May 7th high, right, we went down in 1, up in 2. I actually modified this just a bit, right, because before I was calling the wave 3 here topped, but that would have not made sense. Also the wave 1 here, that would have not made any sense, because now in looking at it, if we were trying to remain optimistic and bullish in this interpretation, wave 4, if wave 1 was here, wave 4 already surpassed the territory of the wave 1, so that's invalid. So moving wave 1 here, which is still valid, this was a wave count that I had before. The way we're looking at it now is that wave 1 down in 2, okay, we did not go beyond the territory of wave 1, just barely. Okay, so this is still valid. A 5-wave upside into the wave 3, and then just like in the Nasdaq, we have A, B, and C holding support at the previous all-time highs. And now you know, the SPY is a little bit more of a danger. All right, this is why, because if we do now, this is our last resort, right? This is our last level of defense, the previous wave 1. If we end up breaking the previous wave 1, if we keep on going lower, right, if we don't print 5 waves up, fill this gap and continue, okay, the likely scenario is that we're going to roll over and break this low, break this high, and thus invalidating this entire wave structure. All right, and what does that look like? It'll look like something like this. I'm only going to review the daily time frame. All right, so from post-COVID lows, all right, March the 20th of 2020, we go up in 1, down in 2, minor degree wave 1, ABC pull back into wave 2, 3, 4, 5, complete intermediate wave degree, wave 3. We come down to the wave 4, ABC pull back into the wave 4, and now we have already completed the wave 5. The wave 5 came into resistance at the 78.6% retracement, extension of wave 3 versus wave 4. The 5th wave in the higher degree came in at the 23.6% retracement of wave 2 versus wave 3 versus wave 4, thus completing the primary degree wave 1. And now we're looking for a 3-wave pullback into the wave 2 of the minor degree. I mean, this is a short-term pullback bearish scenario, okay, that could potentially take a couple of months. I'm not going to predict or anticipate what type of months or how long it's going to last, because this is just quite impossible to determine that in the markets. But I will say that if this is the count, then we continue and lower, but we wouldn't know until we finish the wave A and then bounce in the wave B. Okay, if this is the case, we will be extremely patient to wait for this price structure to unfold. Down in A, up in B, we will look for key levels of resistance here. We're using Fibonacci levels to determine a reasonable price so that we can take advantage of the wave C decline. Okay, theoretical levels and the SPY, if this is the count, is at the 3071 spot 11 and 335, thus giving a good, I mean, a lot of people are scared of this count, and I don't think you should be, right? Because if this is the case, I mean, after the wave 1 completes, wave 2 sets its low, what's next is the most important wave of the Elliott wave theory, which is the wave 3, is the longest wave and the most impulsive and aggressive one. Okay, so for those of you who've missed this entire rally on the wave 1, this is your chance to be patient. Be patient a couple more months, however long this takes. But I do anticipate that perhaps towards the end of the year, we may start seeing a low and start rallying into new all-time highs. All right, guys, so if you miss this rally here, rest assured that you are going to get your chance at a pullback to take advantage to new all-time highs. Okay, so I'll leave you with that, but that's just something to keep in your back pocket. But for now, we must hold these levels. All right, we must hold 417 spot 66 on the SPY, and on the Qs, we must hold the 1618 352 and the 344 spot 51. All right, guys, so with that being said, thank you so much for your time. Thank you for subscribing. Thank you for smashing the like button and hitting that bell notification so you'll be notified when I upload these videos. If you want Elliott wave analysis for your charts, for whatever you're looking at, consider subscribing to the group. The link is down in the description. All right, guys, thank you so much. I shall see you guys tomorrow. Take care. Bye bye.